Good morning. Welcome to the Quid Report Live. This is my first time hosting a live broadcast, so we'll see how this goes. And just a quick review for the week in progress. It's been a slow week. And then welcome to the Quid Report Live. This is my first time hosting a live broadcast, so we'll see how this goes. And just a quick review. So we will get right into the charts here. I hope everybody's having a great holiday. I hope you guys are not trading too much and really just focusing on just looking at the moves and not focusing too much on trying to get in and out of trades. Hopefully you've let some winners run from last week. And you've had stops and or limits in place and allowed just allowed your trades to kind of play out while this last week of the year kind of progresses. It's been interesting. Monday was really quiet, and then I think Tuesday things with the pound really started rolling. So let's see what we have. Okay. Now I'm going to start with cable. So I'm doing this live. You kind of go through my process. You'll kind of see my process. So looking in, this is kind of how we ended the week. 240 under 60 minute is what I look at on a daily basis, day in and day out. We started the week really quiet, and then we dropped and we hit this support level. So I see this kind of move and I immediately want to draw a Fibonacci, right, to see what my setup will be and to see where I can get in. But then I'll look at the weekly and we're hitting this huge support level. You see I have it drawn out as a zone between 148 and 147.50. And if you've been trading the pound for any good amount of time, you know that this is a very familiar level of support. We've only broken down below it once, and that was at the first half of the year, back in March and April, before we rallied higher. Before that break back in March, we hadn't been below $1.4750 since 2010. So this right now, where we're at on the pound, is a huge level of support. Not surprised to see it bouncing along this support level as we've done. We've touched since last week before Christmas. So we're touching support at 148. We're bouncing a little bit higher, but really this close. So we got this break below $1.50 and didn't pan out, and we immediately rallied higher. Then 3 weeks ago now, we broke below $1.50 and we got a confirmed candle lower. So right now, cable is just bearish below $1.50, and you're really just looking for a setup to go short. Ideally, you want to get short into $1.50, right? But you can see that since this breakdown, we haven't really retraced much at all. It's been very shallow retracements, lower, with $1.4950 kind of being our high last week. So the natural inclination for me would just be, to draw Fibonacci here and just kind of see where we'd set up. So you see $1.4850 is a good place. So anywhere down around $1.4850, $1.4883 being our 618 kind of line in the sand there. But really, we're going to see sellers set up all the way into $1.4950, right, the previous high, and into $1.50, the psychological level. So cable is bearish here, which means that we're going to see some dollar strength. And I'd like to just look at what the euro dollar is doing. You guys know I don't trade this pair at all, but I do like to look at it just to get a sense of dollar strength. I don't really like the dollar index, because I do believe in trading charts into themselves, but I do like to see how the dollar is playing against other pairs. And you can see that we get some dollar weakness against the euro, where we're seeing dollar strength against the pound. So what does that mean? It means that the euro pound is rallying. And we can see that here. We got great retracement last week into $1.73 after even rallying above I'm sorry, $1.73, but 0.73 after rallying above 0.74, right into our buy zone. Really great setup, retracing almost 100 pips, and to open the week, we came back above 0.74. Again, we're going to then zoom out and look at the weekly. And we see that despite easing from the ECB, quantitative easing, even cutting interest rates, that the euro pound has not been able to close below 70 pence, which is really the huge psychological level. And here, this is the huge level. When we haven't been below 70 pence since 2007. So really, a lot of traders expected us to be quite lower, especially when the ECB finally started easing. And we got a lot of this action when we dropped from 85 pence down to 70 pence. That was speculation of easing, speculation that we would get quantitative easing and rate cuts out of the ECB. But once that did materialize, it was kind of like sell the rumor and buy the fact. And so we've been seeing the euro rally actually since that. Come back. So what for me, after breaking above really the 50% retracement and coming back above 72.50 and finally being able to close above that, we spent almost 2 weeks really trying to hitting our heads above this resistance, at this resistance level at 0.7250. So after breaking above this level and finally holding support last week, we've gotten this rally above 0.74. Really for me, we're looking at the highs back into 0.75, and I'm expecting a break higher. I'm actually expecting that the euro pound will rally, and we need to look back at the weekly, that if we do get this break, and this is a big level. I mean, we were back here back in May, we tested 0.75. We did it again in October. So we probably look to do this again in the new year. And really it really will be about a break and hold, right? So we break above this level, and this can be huge. We could see a retracement back to 80 pence. So that's what we're seeing the euro pound. If we get another hold here, we'd like to see us go back into 0.70 and see if we can get a break below that. But really, if we get a hold, an initial hold on at 0.75, look to see if we hold support at 73.50 and really ultimately at 72.50 on any kind of serious correction off the 75 resistance level. We'd look for 72.50 to kind of hold so that we can get some more buyers and buy momentum on a break higher. But crazy enough, the euro looks bullish and much more bullish than the pound. And I think a big reason for that is because of unwinding expectations from the Bank of England, where all year really we had been waiting for an interest rate hike or some kind of tightening out of the Bank of England, and they've backpedaled tremendously away from that as they start to see inflation subsiding. So moving along to the pound yen, and let me just check to see if there are any questions. Okay. And so we'll move back to the pound yen. So this is kind of where we were at the end of last week. Hardly any retracement at all after breaking below 184. This was really the big level that bulls wanted to see hold, right? To kind of challenge and get back to the highs at 195. But sellers continue to come in at 186. When we were able to rally, we got to 188. But when we finally got this break below 2 weeks ago, so I guess it's 3 weeks ago now, and finding resistance. Once we found resistance a couple of times at 184, this was looking for a break lower. And really, we're looking for this to return back to this 175 support level. And this is eventually where this is going. Our target, conservatively, our target is 177.50. And really, that would be, we've already broken below the 61.8 level. So yeah, a conservative target would be 177.50, but breaking this Fibonacci level here at 61.8, we're looking for a return even below the support level to 167. A close below 175 would be the first time that that has happened since 2014. It's going to be a huge event for sellers, really, as the yen continues to strengthen, quite frankly, on the back of a hawkish Bank of Japan. I know a lot of economists are looking for more easing out of the BOJ in 2016, but the rhetoric just hasn't been dovish. The Bank of Japan is actually turning quite hawkish now. They're not completely optimistic, and it's not like they're looking to raise interest rates or even let up on their quantitative easing program, but they are quite optimistic about inflation returning to zero and maybe getting back above zero, and their economy improving. And for that reason, we're seeing the yen really strengthen on its own fundamentals rather on risk flows or even on equity flows. So that's actually a new development for the yen, and one that we'll be looking to see continue actually into 2016. So if we come back in and see, I would not be looking to get in until I got a major retracement. But those of you who are a lot more aggressive than I am, or a little more aggressive than I am, can try to find an ideal setup on a Fibonacci level. So that would bring you into 179, 178.80, and we've gotten that kind of bounce. And as long as we stay above the lows here, there's a possibility for price to continue up a little bit higher. The ideal setup for me, however, would be not on a shallow retracement, but I'd like to see a major retracement back into 180. And you can expect, if we do get that kind of bounce, particularly as traders come back to their desk in the new year, we get up to 180, we'd probably be met with quite a few sellers. So that's the pound yen. We'll go into some of our commodity dollars. Pound CAD, just looking at a 60-minute, ending the week with the choppy action in oil. The Canadian dollar is basically it's following oil. You can say it's highly correlated. It's safer to say, right, that it is following what oil is doing. And as oil bounced this week, we finally got a strong dip back to 205. And you can see the significance of 205 when we come out to the weekly chart. So 205 is here, and then 201 is a huge level. But this is the bigger play here. The bigger play here is after this tremendous rally, because of the 2 interest rate cuts from the Bank of Canada this year, we got this huge rally. And then lately we saw some consolidation. And this consolidation is right into our huge fib levels here. And we rallied when oil fell 2 weeks ago and dropped with some volatility. But we didn't get a break above this 209. So right now we're playing off of a failed high. And this is, we're kind of into our retracement level. So we were waiting for 205 last week. We finally got it at the beginning of this week. I don't know if you guys are seeing my notifications come up. I need to turn them off. Really, ideally, I like the 50 back. If we get into 204, this will be a huge buying opportunity as oil still remains bearish, and we can expect probably for oil prices to continue to drop. If we don't get new lows in oil, It'll be interesting what the pound CAD does, because we have an unwinding of, hawkish expectations in the pound. We might see a retracement further coming onto the weekly chart, right? But it still keeps this pair still remains bullish even into $1.9250. So we'd like to see that these lows would hold if you're bullish on the pound CAD, and basically, still bearish on oil. You want to see that this retracement, actually this current retracement, holds, right? Hold above 202.70, the 618 Fibonacci level. But right now, this is a prime area for buyers, and you can see that we're already getting a bounce here as buyers have stepped in at the 205 level and the 38.2 retracement level. So if oil continues to bounce, into the new year, and maybe as the full trading week gets underway next week, perhaps we get into 204. But I'd expect to see buyers come in here and try to challenge not just the recent highs at 209.50, but really these multi-year highs at 209.70. So far, 210 has been a real, been a huge level of support. So we'll see how that plays out. But right now, buyers have a really nice look right now around 205 and lower. So don't chase moves. We have this bounce here. And again, if you're a more aggressive trader, because you have a shorter time frame, you can see that if you were looking to go short, that we have the pullback off of the fib levels here, and perhaps we get a dip lower. And again, any dip lowers, hopefully you're if you're shorting pound CAD, you're doing it on a short-term level, because we can expect buyers to step in at the week lows. Pound Kiwi, one of my faves. So this has just been technical perfection. If you're a Fibonacci user like I am, since the beginning of the month, really into November, we've just been getting these nice kind of stair-stepped grind lower as we move lower. And I've just kept these fib levels up just to show, like, as we've moved higher, moved lower, I'm sorry, we've bounced higher, and we've made some lows, and we've bounced higher, we've made new lows, so this has been great. And this is a recent move lower, this week's move lower, and break below this huge 618 level. This is a big time break, especially as we really zoom out on a monthly chart. We see that we've had this tremendous rally as the Reserve Bank of New Zealand had also cut rates and was pretty dovish all year. But this ultimate sell zone, it held pretty tough between the 618 and the 205 as we made highs at 253, still holding in the sell zone. And what we might be seeing playing out is a return back to 177 lows. But the RBNZ is still pretty dovish, and even cut rates this month. And in the face of that rate cut, we've seen the New Zealand dollar rally tremendously, as we see that we're breaking below this 618 level, right? So it'll be interesting how to see how the central bank reacts to this this Kiwi strength. They've already stated and expressed that it's not a desirable situation to have the Kiwi strengthen and to strengthen so much. So the level that we really are going to be looking at is this 210.50 level, which was former resistance here on the weekly chart a couple times, right? So back here in 2011, 2012, then in 2014. So 210.50 is huge, big level for a pound CAD. I expect to see this to see price continue to drop, and then we're just looking to take profits if you're short already, and to take profits at this level. I mean, so what is this? This is 600 pips away. I mean, really, you can just hold your shorts until 210.50. And we'll be looking to take profits here, and then we'll be watching to see what price does. There's no need to forecast or predict. We just, see what it does. If we get a hold and we bounce higher, then if we get a hold, we'll bounce higher. If we get a break lower, we're first returning to, you know, the lows on this huge Fibonacci move. And really ultimately on the larger monthly move, we'd be looking for a return back to 190 or 177. So this is a big move, and I wouldn't be too surprised to see some action from the central bank as the pound Kiwi gets closer to 210.50. Again, if you're looking to see where, you know, where you could step in on a short, add to your position, or to get in, for right now, we're looking at 217.10. Again, with the new, this is, you know, flows are thin, so honestly, probably the better setups would be to wait for next week, and to see what would happen on a larger retracement and to see where we would go on a larger retracement. This is a very volatile pair. There's no reason why I couldn't get, you know, go back to 220. But a hold below 220, as we've already seen, has been a bearish development and would continue to be so. Expect sellers to step in there. But again, more aggressive sellers looking to establish or add to positions right at 217. A pound Aussie. So here we were with the pound Aussie. We got this nice retracement last week, and we've got this breakdown after holding 205, jostling around there. We finally got this breakdown right this week as the pound Aussie has continued to find strength. But interestingly, we're just really moving in a large channel, a large down channel in the pound Aussie. And it's been really, again, like a pound Kiwi for fibs, but in this channel, this it's just been technical perfection. If you've been able to ride this wave, it's literally held at the highs and held at the lows. And if you were short at 212, and many of my subscribers on the Quid Report were, you've at least held to 208, 205, and you know, since this is a channel and a trend line, it can be kind of subjective. You're looking to take profits here at 203, perhaps even 202.50. This is still part of a, it's been a grind lower, and it's part of a larger retracement of the bigger breakout out of the triangle. But the pound Aussie has just basically been moving in this channel. So I would just be looking for next week, into next week, and see if you've already taken profits, and hopefully you have taken profits right now at these lows, since we got, you know, a break of the 618 and we got a return to lows. So this Fibonacci move has played out on the reversal, and we just look to see what happens here around what 202, 202.50, 201, to see if we get a hold of this bottom of the channel, and quite likely we get a return back to the top of the channel. With commodities still very weak, it's not completely unlikely that the Australian dollar would also look to weaken as well. And before I get any questions about the pound franc, which my disclaimer, I don't trade this pair. I don't recommend that you trade this pair. The S&B is still very much in these markets, but $1.55 has been just the level of support for a central bank that wants a weak currency. They have not allowed this currency to get, this currency pair to get above, or this exchange rate to get above $1.55. So this is a Fibonacci move. Right into, well, it still has a little ways to go, right? 200 pips to go into the Fibonacci level. And, you know, we'll see how the central bank reacts with increasing strength in the Swiss franc. But really, this has been a really a dead market, in my opinion, as long as the S&B is actively intervening. Even if it's in the euro franc, it affects the pound franc. Just really no interest in trading this pair, but I do like, if I were to take any trade, it would be a short at $1.55 with a tight stop, you know, above these highs. It's been holding since 2012. And so this was the currency depeg of the euro franc, and we were right at $1.55. And if you took this short, you experienced over 30,000 pips. So, you know, $1.55 or Frank 55 has really been the short, has been the trade, and anything else really is speculation, as you're kind of wondering what the SMB will be doing. So that is all that I have. If you have any questions, I think I enabled the questions below. Oh, any questions? I'll wait a couple seconds, see if any questions come in for me. Otherwise, Happy New Year. Enjoy yourselves. Really take a break from the trading. Refuel give your financial capital some rest. Refuel psychologically. Get that psychological capital up. It's going to be a very interesting first full trading week of the year. So Happy New Year. Hope you all had a Merry Christmas and enjoying your holiday breaks, enjoying loved ones. Thank you.